Hello, and welcome to another edition of the Dapper Dividends YouTube channel. And boy, are you in for a treat because we're talking some Realty Income once again. But in all seriousness, I listened to the Q4 24 earnings call from Realty Income and 2 investor conferences, and I want to share with you some pretty interesting things that I heard. Actually, 5 of them I'm going to break down for you. So whether you own Realty Income or you're thinking about buying Realty Income, I think you're going to find this pretty interesting, and away we go. So the first thing is something that CEO Sumit Roy shared about Realty Income stock price, and something we've all kind of been wondering is, hey, Realty Income's a really solid REIT, real estate investment trust, so why in the heck is their share price falling? So check out what he said, quote, "Let me take you back to when we started having this discussion. This was September, October of last year, and we were right around our 52-week high at that point. And within that same 4-month time frame, since then to today, we've both hit our 52-week high and 52-week low with next to no information about the company coming out into the market." He went on to explain that they have a 0.83% negative correlation with the 10-year treasury. It's kind of like a seesaw. When the treasury yields go up 1%, Realty Income drops 0.83% and vice versa. Check out this chart from our good friends at simplysafedividends.com, which illustrates the relationship pretty perfectly. Notice how Realty Income's dividend yield historically maintains a 1.5% to 3% premium over the 10-year treasury. And this is crucial to understand as a long-term investor because when interest rates rise, investors can get higher returns from bonds, making REITs like Realty Income or Agree Realty less attractive. And on the flip side, when rates fall, Realty Income's steady dividend becomes more appealing. The company's fundamentals remain rock solid, but short-term price movements are heavily influenced by interest rate expectations. Now, I don't think I introduced myself. I'm Russ. It's nice to meet you. And don't forget, in the description below, I have a link to DapperDividends.com where you can sign up for the free and fantabulous weekly newsletter where I share all the portfolio moves as well as a few investing thoughts. And there's also a link for Seeking Alpha where you can save a bunch of money on an annual subscription with my affiliate link. In the Q4 earnings call and the investor conferences, I also found out that now 7-Eleven is Realty Income's biggest tenant at 3.5% of the rent roll. And this came after a massive $770 million sale leaseback deal in Q4. Now, what's really cool is how they've built this relationship over time. Sumit mentioned this was their 6th transaction with 7-Eleven, and get this, 4 of these deals never even hit the open market. 7-Eleven just called them up directly and said, "Hey, we want to do a deal with you." And that is the kind of relationship power Realty Income has with these major retailers. Now, I know that you've heard size matters, and I can't speak if that's true for you, but in the world of REITs, that definitely matters because smaller REITs can't just write a $770 million check without creating some serious concentration risk. He also touched on the tariffs, and because they're a retailer, some of their tenants, or as they call them, their clients, might be vulnerable. And this is what he shared that I thought was really interesting. He said, quote, "Dollar General has only 3% of its goods coming from China, so the tariff is not going to have that much of an impact. Dollar Tree, on the other hand, is 20%. He also went on to say that Amazon has 70% of its goods on the retail side coming from China, but he doesn't worry about them because most of their profits come from AWS. I love that kind of insight because it shows that Realty Income understands their tenants on a deep level. Now, he also mentioned that they're expecting about 0.75% of their rent not being paid by tenants in 2025, and it sounds concerning, right? But it's actually pretty conservative because it's like saying if they collect $100 in rent, they're only expecting to collect $99.25, which looks like they're being careful with their projections, which I appreciate in a dividend paying paying stock. Thirdly, Realty Income's getting pretty dang smart with how they manage their properties. They've built some pretty cool proprietary analytic tools that help Realty Income decide what properties to buy and which ones to sell. And Sumit Roy had this to say in their earnings call, quote, "By leveraging the vast amount of proprietary portfolio data we possess, paired with our internal predictive analytic tools, we believe we have strengthened our decision making." And it looks like these tools are working because the company's occupancy is sitting at 98.7%, which is really high. But the stat that really impressed me was when they renew leases, they're getting 107.4% of the previous rent. That means if a tenant was paying $100,000 in rent, the new lease is now going to be for $107,400, which is some serious pricing power. And also check it out, since 1996, they've renewed over 5,800 leases and averaged 103% of the previous rent. This is super important for dividend investors because it shows Realty Income can actually raise their rents over time, which helps support those dividend increases we all love. So think about it, even in a tough retail environment, they are still able to bump rents when the leases expire. Fourth, what really caught my attention is just how quickly Realty Income is growing internationally. Just a few years ago, they had 0 international properties. So check out what Sumit said. Quote, "Fast forward 6 years, we own $12 billion of product. Today, Europe represents 14% of our overall portfolio and contributes about $700 million in rent." Now that's pretty crazy because in 6 years, they've gone from nothing to $12 billion and Europe makes up about 14% of their rent portfolio. Now, I think it's really smart to diversify across the world because why not? If the United States is having a rough go of it, other countries like the UK, Spain, and Italy, they might be doing a little bit better. So, hey, not putting all your eggs in one basket can be kind of smart sometimes, right? And here's something else that's interesting. They're finding better deals in Europe. In 2023, Sumit mentioned that through Q3, about 55 to 56% of their investments were international, which tells us that they're seeing better opportunities overseas right now. The international growth is just going to give them more ways to grow that dividend over time, which is what us, who are passionate passive income investors, want to see. And the fifth and last thing that I want to share, which could be the most exciting and the biggest opportunity, is that Realty Income is launching a private capital fund. It's something completely new for them. It's something that Prologis has done for a few decades, and it could be a real game changer for Realty Income. And Sumit said that the problem they're trying to solve with the private capital fund is that they sometimes have to walk away from these really great deals because the returns in year one are pretty low and they just aren't going to make sense for the public shareholders. So listen to what Sumit said, quote, "There was $3.6 billion of product that we could have done if we had the fund business up and running. The private shareholders don't care about first-year spreads as much. They're very focused on what is the total return profile of these investments." So basically, they had to pass on $3.6 billion worth of deals last year, even though they were great long-term investments, but it just didn't make the cut for short-term returns, and now with the private capital fund, they would be able to do those deals. So there's two big benefits here, and these slides are from their investor presentation, which I have linked below. First, they won't have to issue as much stock to grow, which addresses a common complaint from many shareholders. Second, they'll earn fees for managing the fund's assets, creating a new income stream. And I really think this is a great move because it taps into pension funds and endowments, which Sumit says are, quote, 10 times the size of the public markets. So there you have it. I was stationed on an aircraft carrier, the USS John C. Stennis, and if we wanted to turn it around, it's so big, it can't turn on a dime. Realty Income is kind of the same way. They are one of the biggest REITs in the world, and they are not able to just pivot on a dime. So some of these things take time. The private capital fund is going to take time. Now, if you're particularly excited about this private capital fund as much as myself, this floating little box right there next to my head, I did a video just for you, my friend, that you can check out where I talk all about it and you will learn about the private capital fund. So if that sounds good to you, join me. click this floating little box and I'll tell you all about it there.